Testing 1 2 3, testing 1 2 3. Hello, this is Jordan, and this video is being recorded on the evening of Friday, November 22nd, 2019. And in this quick video, I'm going to discuss what a leading indicator currently says about the gold stocks. So the leading indicator I'm talking about is the advanced decline line, and specifically I'm looking at the advanced decline line for GDX. So at the top of this chart we have GDX, it's a daily line chart, and at the bottom we have the GDX advanced decline line. And for those of you who are unaware, an advanced decline line, it's measuring every day basically the net number of stocks in that particular market that are advancing. And so if it's negative for that day, that obviously means more stocks within that market have declined on the day than stocks have risen, and vice versa. So the advanced decline line, it's a breadth indicator or a participation indicator. Now when we're looking at uptrends, a market is strongest when the majority of stocks within that market are all rising. That's strong breadth and participation. So that's signaled by the advanced decline line. And the advanced decline line is a great leading indicator because typically when a market is declining or correcting and it's ready to turn around, the advanced decline line will usually start to strengthen before the market itself. And at the same time when the market is peaking. When a market is close to peaking, the advanced decline line tends to weaken before the market peaks. So keep those in mind. And what we're seeing here in the current advanced decline line, and I've highlighted it there, you can look at the bottom. 2 days ago, I believe Wednesday, the GDX advanced decline line actually made a 3-year high. So that's the highest. I mean, that's the highest since basically August 2016. So, you know, in recent weeks, we've been talking about how you can see higher lows in the advanced decline line since September and October. You know, that's been in place, but also at the very end of October, it made a slight higher high. So there was a positive divergence there. Now that positive divergence strengthened in recent days because the higher high at the very end of October, that was surpassed by the higher high from Wednesday, and the higher high from Wednesday, based on this chart, that was a 3-year high for the advanced decline line. So even though GDX, even though precious metals, they're in correction mode, they've been correcting, maybe consolidating, call it what you want, they're off the highs, but the advanced decline line for GDX, that's made a higher high. And a couple of days ago, it made a 3-year high. So this is just incredibly positive. It doesn't necessarily signal that the market is ready, that this correction is immediately going to end and everything's going to run to new highs and break out. It doesn't necessarily signal that right now. But what it does tell us is even though the market's correcting, even though there's risk gold could test 1400, there's risk GDX could test 25, maybe even a little bit lower, even though those risks are present, the breadth of the market, it's holding up very well. It's fairly strong, and specifically it's telling us that this correction is being led by a fewer and fewer number of the gold stocks in GDX. So that's really what it tells us. And again, as I said before, when a market is correcting or consolidating, typically the advanced decline line for that market will start to strengthen ahead of time before that market turns around. So again, I can't predict exactly when the market is ready to turn around, when GDX is going to make that rally up to 31 and have that huge breakout. I can't tell you if that's going to be in a month or 3 or 4 months. But we just have to look at this leading indicator here, the advanced decline line for GDX. I can't say it enough. This is just really encouraging. It's really positive. Again, a couple of days ago made a 3-year high. This is really positive for 2020. This is telling us what is to come in the year ahead. So I know that was a lot to take in just for one chart and one indicator, but I can't say it enough. This is just very positive. Weakness in this sector, specifically in the stocks, it's definitely a buying opportunity. And with that said, you can follow all of my work at thedailygold.com. You can also subscribe to my YouTube channel here. You can opt in at the Daily Gold. You can get my book. I am doing an update to the book at the end of this year. I'm going to have a chapter on 2020 to add to that. So get on my free list if you're not, because if you're on my list, you will get the updated version of my book. You'll get a PDF copy of that. Now, in my premium service, I focus on market timing and stock selection. And if you really want to know which juniors have the goods and have the best management teams, the best potential, consider our service. It's highly affordable. And in regards to buying weakness, we've taken advantage of that. In the last 10 days, we bought one junior explorer that I'm really optimistic on. I think he can be a 3 or a 5 bagger. It corrected quite a bit. And also a junior producer we bought, not this week, but the week before. It had corrected, really has about 95% of what I'm looking for in a junior producer. Both those positions have bounced so far, but they're still great values. Those are the things I'm looking at now. I think if we see a little more weakness in the sector, we're going to see, in that case, some fantastic buying opportunities in December. So I know the market's correcting now. It may not be ready to make that next leg higher just yet, but the advanced decline line is one of several things that's very, very encouraging for 2020. I hope you liked this video. Thanks so much for tuning in, and I look forward to publishing another update for you in the days and weeks ahead.